Jim Rickards. By doing this to the US, China will shock the world. Jim Rickards is an American lawyer, economist, and investment banker known for his macroeconomic analysis expertise and views on international finance and monetary policy. He's a frequent commentator on financial news networks and has advised various government agencies and financial institutions. In the current state of international affairs, Rickards believes that China's current decline makes them more dangerous, as waiting will only make them weaker. China's peak, as Rickards stated, will be the very aspect that will shock the world. Hello and welcome to another video of Finance Sense, where we cover all the latest trends in the financial markets and the economy. In this video, we'll explore the insights shared by Jim Rickards on China's peak as a superpower and what this implies to the US dollar as a reserve and payment currency. But before we start, make sure to leave a like, subscribe, and comment below if you enjoyed watching this video, and turn on the notification bell to keep posted. In his analysis of China's current state of decline, Rickards argues that China's recent aggressive actions in the South China Sea and its attempts to establish its dominance in the region and neighbors such as Taiwan are a reflection of its declining power. He believes that if China were truly a rising power, it would be patient and bide its time, waiting until it was stronger relative to the US before taking any aggressive actions. However, because China is in decline, it is more likely to act aggressively now while still having some relative strength. As per Rickards, this is as strong as they're going to get, and waiting will only make them weaker. Rickards points to historical examples like Japan in 1941 and Germany in World War I to illustrate the danger of a peak period of relative strength. In both cases, the attacking nations were not necessarily stronger than their opponents, but they acted when their relative strength was at its highest, leading to devastating consequences. This, according to Rickards, is what makes peak China so dangerous. In addition to his analysis of China's decline, Rickards also emphasizes that when discussing the rise and fall of currencies, it is crucial to differentiate between a reserve currency and a payment currency because they are two separate entities. The US dollar is considered a reserve currency, which accounts for 60% of global reserves. However, he notes that while the US dollar is regarded as a reserve currency and is used for international trade, the People's Bank of China does not hold piles of $100 bills in its basement. Instead, they have dollar-denominated securities such as treasury bills and notes, which are priced in dollars. Rickards highlighted that it is not the currency that serves as the reserve, but rather the security. The US dollar's strength as a reserve currency stems from the fact that the country has a large, liquid, and well-regulated securities market that can accommodate global savings. This is not the case for other countries. For instance, there is no significant Chinese bond market, and there is no rule of law in China, making it difficult for them to establish their currency as a reserve currency. Similarly, no one would buy a Russian ruble bond because Russia lacks a good rule of law. The US Treasury market has been around since Alexander Hamilton's era, which means that the US has had over 230 years to perfect it. It will be quite challenging to dislodge the US dollar as a reserve currency because of the existing infrastructure and regulations. Furthermore, the US Treasury market is considered the most liquid and deepest market in the world, with a daily trading volume of over $500 billion. The market size and the infrastructure built around it make it difficult for any other currency to compete with the US dollar as a reserve currency. However, as a payment currency, any tender that people are willing to accept can potentially be used, regardless of whether it is a reserve currency. The rise of digital currencies such as Bitcoin poses a potential threat to the US dollar's dominance in the payment currency market. Cryptocurrencies offer an alternative to traditional payment methods, allowing for cheaper and faster cross-border transactions. Some countries such as El Salvador have already adopted Bitcoin as a legal tender, while others such as China are working on developing their own digital currency. Additionally, the BRICS countries, which include Brazil, Russia, India, China, and South Africa, are working on a new commodity-backed currency to use for trade between and among themselves, as well as with the Shanghai Cooperation Organization and Southern Central Asian republics. They are even welcoming new members such as Pakistan. Chinese President Xi Jinping has also discussed with the Saudi Arabian Crown Prince and King Salman the prospect of Saudi Arabia selling oil for China's yuan. The BRICS countries' efforts to create a commodity-backed currency could potentially challenge the US dollar's dominance in the payment currency market. The BRICS currency would be backed by a basket of commodities such as oil, gold, and agricultural products, providing a stable value compared to fiat currencies. This would allow countries to trade with each other without relying on the US dollar as an intermediary currency, reducing their vulnerability to US sanctions. On the other hand, Rickards recently shared his thoughts on the current state of international sanctions and their impact on global economies. His comments on the impact of international sanctions on the global economy highlight the potential unintended consequences of using economic sanctions as a tool of foreign policy. According to Rickards, the US and EU sanctions on Russia have been a complete blunder and are likely to backfire, hurting the United States more than Russia. He explains that despite the sanctions, the Russian ruble is now significantly stronger than it was at the beginning of the war in Ukraine. Rickards believes that this is because Russia has not lost any oil sales, as countries like India and China are buying up the oil that Western Europe has refused to buy. Furthermore, while sanctions may be intended to punish countries or leaders for their actions, they can also harm ordinary people and damage the economies of the countries imposing the sanctions. This, in turn, can lead to unintended outcomes such as strengthening a targeted country's currency or adopting alternative payment methods as countries seek to reduce their reliance on the US dollar. While sanctions have been used as a tool of foreign policy for decades, their effectiveness has been called into question in recent years. Many experts like Jim Rickards share the opinion that sanctions can have unintended consequences and often end up hurting the very people they are meant to help. In the case of Russia, the sanctions imposed by the US and EU have been targeted at key individuals and entities, such as oligarchs believed to be involved in destabilizing activities in Ukraine. However, as Rickards points out, Putin's power lies not in these oligarchs, but in other areas such as the military, intelligence agencies, and support from the Russian Orthodox Church. As a result, the sanctions have not had the intended effect of weakening Putin's grip on power. Instead, they have caused economic hardship for ordinary Russians and Europeans, with energy prices soaring and inflation ending people's purchasing power. Furthermore, some experts argue that sanctions can also have the opposite effect of what they intend. In the case of Russia, for example, the sanctions have spurred the country to develop closer ties with China and other non-Western powers, further isolating the West. Additionally, the sanctions have encouraged Russia to invest in its domestic industries, leading to a diversification of the Russian economy and reducing its reliance on Western markets. Rickards believes that the sanctions have been a complete disaster and will remain so. Rickards also outlined that countries like Turkey, China, and Saudi Arabia are looking for ways to reduce their dependence on the US dollar. These countries are wary of the possibility that the US may freeze their reserves if they do something the US doesn't like. One way to reduce this risk is by increasing their gold reserves. Rickards believes this move would help countries protect their assets and reduce their vulnerability to the total surveillance state. Overall, the increasing interest in alternative payment systems and currencies reflects a growing dissatisfaction with the dominance of the US dollar in the global financial system. While it remains to be seen whether these alternative systems will be successful in reducing dependence on the US dollar, they represent a significant challenge to the existing order and could have important implications for the future of the global economy. Hi, we hope that watching this video was interesting and that you learned something valuable. If you enjoyed it, please hit the notification button, like, subscribe, and watch more of our videos. Also, don't forget to share your comments in the comment section below. This is Finance Sense, helping you stay current on all the most recent changes in the financial markets and economy. Stay safe and look out for the next video.